Ever wonder if you're leaving money on the table when buying or selling crypto in Canada? If you're a Canadian crypto enthusiast, you've likely grappled with choosing the right exchange. Two names often come up in the conversation: Newton and Binance. But beyond the flashy interfaces and promises of low fees, there's a hidden cost that can significantly impact your bottom line: the spread. Today, we're diving deep into a head-to-head battle, comparing the spreads on Newton and Binance Canada. This isn't just about listed trading fees, it's about the true cost of your crypto transactions. We'll break down what spreads are, how they work, and most importantly, how they stack up between these two popular platforms. By the end of this video, you'll have a clear understanding of which exchange might be better for your trading style, helping you maximize your crypto gains and minimize those often overlooked expenses. So, what exactly is a spread in cryptocurrency trading? Imagine you walk into a currency exchange booth to swap Canadian dollars for US dollars. You'll notice two prices: a slightly higher price at which the booth sells USD to you, and a slightly lower price at which they buy USD from you. The difference between these two prices is the spread. In the crypto world, it's the same principle. The bid price is the highest price a buyer is willing to pay for a cryptocurrency, and the ask price is the lowest price a seller is willing to accept. The spread is the difference between this bid and ask price. Why does this matter? Because the spread is a built-in cost of trading. It's how exchanges make money, in addition to any explicit trading fees they might charge. A wider spread means you're effectively paying more to buy and getting less when you sell, even if the stated trading fee is zero or very low. Think of it as an invisible fee that quietly chips away at your profits. Understanding spreads is crucial for any crypto trader, especially in a dynamic market like Canada where regulatory landscapes and platform offerings can vary significantly. Now, before we jump into the direct comparison, let's set the stage for our two contenders. First up, Newton. Newton has positioned itself as a user-friendly, low-cost Canadian crypto platform. They boast easy funding options like Interac e-transfer and aim for a seamless user experience. Newton is registered with FINTRAC and the OSC, providing a sense of regulatory compliance and trustworthiness for Canadian users. Their fee structure often emphasizes no deposit or withdrawal fees for CAD, which sounds fantastic on the surface. However, their primary revenue generation comes from the spread. Newton aims for competitive spreads across its selection of over 70 cryptocurrencies. They often highlight their commitment to transparent pricing. User reviews frequently praise Newton for its simplicity and quick e-transfers, making it a popular choice for those new to crypto or looking for a straightforward buying and selling experience. Some users have reported occasional login issues or UI changes that weren't always improvements, but generally, the sentiment leans towards a positive user experience. On the other side of the ring, we have Binance. Now, a crucial point here for Canadian viewers: Binance withdrew operations from Canada in 2023 due to regulatory pressure. This means that if you're in Canada, you cannot legally use Binance's main platform for new accounts or continued trading. While there might be workarounds or existing users, for the vast majority of Canadians looking to get into crypto today, Binance is not a viable option. This immediately impacts our comparison, as the user experience and spread competitiveness become moot if the platform isn't accessible. However, for the sake of a comprehensive comparison for those outside Canada or those who might have used Binance in Canada historically, let's discuss what Binance offers in terms of spreads and fees globally. Binance is known for being one of the largest cryptocurrency exchanges globally, offering a vast array of cryptocurrencies and advanced trading features. Their fee structure is generally lauded as highly competitive, often featuring low spot trading fees, especially for high-volume traders or those holding their native token, BNB. Binance spreads are typically much tighter than many smaller, regional exchanges, owing to their immense liquidity and trading volume. High liquidity means there are many buyers and sellers actively trading, which naturally narrows the gap between the bid and ask prices. They offer various order types that allow traders to minimize spread impact, such as limit orders. Their platform is generally more geared towards experienced traders with a wider range of tools, charts, and derivative products. So, the fundamental difference right off the bat for our Canadian audience is accessibility. Newton is fully operational and regulated in Canada, while Binance is not. This immediately gives Newton a significant advantage for Canadian users, regardless of spread differences, simply because it's a legal and compliant option. Let's delve deeper into how spreads are calculated and how they might manifest on each platform. The spread is essentially the difference between the bid and ask price. For example, if Bitcoin's bid price is $40,000 and the ask price is $40,100, the spread is $100. As a percentage, this would be $100/$40,000, asterisk 100 equals 0.25%. This 0.25% is effectively the cost you're paying to execute that trade, beyond any explicit commission. Newton explicitly states that their revenue comes from the spread. They aim to offer competitive spreads and frequently update these based on market conditions. For Tier 1 assets like Bitcoin and Ethereum, their spreads are generally lower, often in the range of 1% to 1.15%. For less liquid assets, the spreads can be higher, reaching 1.50% to 1.60%. This means if you buy $1,000 worth of Bitcoin on Newton, you might effectively pay an extra $10 to $11.50 in spread. When you sell, you'd receive $10 to $11.50 less than the mid-market price. Newton's free CAD deposits and withdrawals are a huge draw, and they even subsidize some network fees for crypto withdrawals, which can offset some of the spread cost, especially for smaller transactions. However, if you're making frequent or large trades, the cumulative effect of the spread can add up. For Binance, historically, their spreads were much tighter due to their massive liquidity. Their trading fees are typically a flat percentage, e.g., 0.1% for spot trading for non-VIP users, which can be further reduced by using BNB. The spread on a highly liquid pair like BTC/USDT on Binance might be negligible, often a fraction of a percent, like 0.01% or even less, especially if you're using limit orders that allow you to set your exact buy or sell price, effectively becoming a maker and often incurring lower fees. The combination of low trading fees and tight spreads made Binance an incredibly cost-effective option for active traders. However, as we've established, this is largely irrelevant for Canadian users now. With that said, thanks for watching and until next time.